Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, January 31st, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I will start with this chart here. This is a weekly chart. I always like to start with the big picture and work my way into the day. About 6 weeks ago, we tested what was a targeted long-term resistance price ceiling channel top at 252.73. I'd mentioned at the time that once tested, you can anticipate the possibility of 3 to 5 months bearish rotation back into the mid to upper 170s. It was the low 180s at that time, this channel bottom dropping. It was considered a clear, actionable possibility, not a clarifying sell signal just yet, until we then settled. This was about 2.5, 3 weeks ago, below this combination rising channel bottom speed line that is presently now in the low 230s. We're not going to see this area anytime soon, but I'm using it for illustration purposes in terms of showing you the sequence of events that have yielded this low. Well, it's not yielded yet. We came very close to testing it. What was it, last Thursday, the big sell-off day? So still sort of there below the market, 175.33 on the daily chart. Once again, on the weekly chart, we have 174.76 and 177.25 is a long-term 5/8 Fibonacci from the January low against the more recent July high. So there's a lot going on between 174.76 and 177.25 that, if tested this week, next week or so, can absorb selling into possibly through the second quarter. And from here, you can liquidate any short position you may have established over the last month and a half and instead go long. Go long on a 3 to 5 week basis back to this new descending 1/3 speed line that is presently at 217.33, and quite possibly as we move into the second quarter, within several months, 3 to 5 at the very most, we could rally all the way back to the 252.73 and dropping long-term channel top. As I've been saying, we could fill this formation out for months to come. And so you're bottom picking the mid to upper 170s in anticipation long term of the low 250s and dropping. And if you're more of a near term swing trader, 2 to 3, 3 to 5 weeks out, you're anticipating 217.33 once we test the 175.33 formation. Now, we might not test that 175.33 formation. We may actually rally to 217.33, but it hasn't been indicated yet until, and I'll show it here actually, I'll go back to this. We closed today above 195.78. This is a combination descending 1/3 speed line and channel top that is based on all the activity stemming from that, was that an early January or late December high? I forget. But in any case, it is a steeply descending, a trend defining by one measure. I'm talking near term. I think this is kind of a 1 to 2 week swing trade, really. If you sold the 195.78 speed line, we didn't actually test it on Tuesday. We didn't test the channel top either, but it is a range to be sold for aggressive day traders, for any day trader, and as I've been saying, possibly for 3 to 5 day swing traders, because once we test this 193.98 to 195.78 region, we can, over, say, by the end of next week, fall to this long-term support at 175.33. So you can play that. So I'm talking to 3 to 5 day swing traders now, selling the 193.98 to 195.78 region in anticipation of 175.33. At 175.33, which is really this wide range here, 74.76 to 77.25, 3 to 5 day swing traders can take profits. Day traders can enter long positions. 3 to 5 week swing traders can take a long position, can reverse, go from short to long in anticipation of 217.33. And as I said earlier, 2 to 3 month, 3 to 5 month near-term investors can buy the 175.33 area in anticipation perhaps of bullish rotation as we move into the next 3 to 5 months back to 252.73. That might look like, if you're a longer term options trader and we're testing the mid upper 170s, reaching for 245, 250 strike out of the money calls that don't expire for at least 6 months. Or if you're a near term options trader, and this is just one example, of course, if we test 175.33, you might reach for 210, 215 strike out of the money calls that don't expire for at least, I would go a couple of months out on that expiration. I don't think this is any more than 2 to 3, 3 to 5 weeks. So there you have it. If we were to close in the coming weeks above 217.33, I see a good low through February, and then yes, it becomes clearly indicated that 252.73 descending channel top within another 3 to 5 weeks, where we can top out on a monthly, possibly quarterly basis. I'm going to take you back to this chart here. 193.98 to 195.78 is our ceiling, and dropping steeply through the rest of the week, below which today we just might test 186.28. 186.28 is FYI. If I were to zoom in here over the last 3-4 days from Thursday's low to yesterday's, that is Tuesday's high, a downside 5/8 Fibonacci is 186.28. Plenty of room for the market to break to that level, holding below 193.98. We can test 186.28 today, where we could bottom out on an intraday, possibly daily basis. It's right about here. If we close below 186.28, that is actually consistent with expecting 175.33 by the end of next week, while holding below 195.78. So don't get hung up at 186.28 overnight, holding a position overnight. I think this just deserves intraday trading. If we do close below 186.28, I do see probably tomorrow this 175.33 channel bottom, which once again, combined with the weekly chart of the same in terms of 174.76, can absorb selling through February, even into the second quarter. From here, we can round back up to the 217.33 level within 3 to 5 weeks, and back to the 252 and change level within several months, 3 to 5 at the very most. As I've been saying, and I'll cover the downside here in terms of the big picture, if you do get long in the mid to upper 170s, and we do happen to close Friday at 173.01 or lower, which is a 1% threshold below 174.76, no good reason to be long Tesla. If you got long Tesla, if you own any out-of-the-money calls, my recommendation would be to liquidate them and perhaps reverse and reach for 102, 105 strike out of the money puts that don't expire. I would go 6 months out on an expiration date. I don't think this will take any longer than 2 to 3 months, but I always like to go twice the distance out in expiration relative to my projected time horizon for reaching an objective. This could also be just a 1.5 month sell-off, very similar to what we've seen off that high from 5 or 6 weeks ago. Is there anything else to say? Yes, there is. I do want to cover this again, and that is to say that if you sell the 193.98 to 195.78 region, once again, you want to see the market back away from it into the close, into the afternoon, by several points anyway. I'm quite sure, and I'm going by memory here, this descending speed line that is at 195.78 today is at 192.63 on Thursday. So, I guess one of the things, one of the ways you could play this is if you do sell the 195.78 speed line, you just want to make sure that we settle in the 192 handle or lower. By the closing bell, of course. I guess it's pretty redundant. We want to close in the 192 handle or lower if you sell 195.78. This is, once again, the 3 to 5 day swing trade. You can sell it in anticipation of 175.33, but because it's dropping at such a steep pace, you do want to see the market back away some into the closing bell. If we do close today above 195.78, I think it is a go-long strategy near term. That is to say, over the next 3 to 5 days, by the end of next week at the latest, I would expect 217.33. So buy signal above 195.78 with a settlement above 195.78. I do think you can go long to 217.33 by the end of next week, where we could top out through the rest of February, fall away again into the 175 handle. I'm going to leave it at that. I think I've said all there is to say. Please click like, share, subscribe. Check out wickedstocks.com. We put out a stock recommendation, a 10-minute video on Tuesday in Shopify. We do 2 a week. Last week, I already forget offhand, but definitely notable large cap stocks that are popular household names that we see opportunities present over the 3 to 5 week to 3 to 5 month time horizon. So Shopify was on Tuesday. You can see it for free by going to wickedstocks.com and taking advantage of our 5-day free trial. You have a great evening. I'll be back tomorrow with Thursday's Tesla.